Hello, everybody. Welcome to the Cafe of Knowledge. Like everybody know, I told everybody last week, this is Mardi Gras season around this part of town. So I have the beads and everything hanging up, and the masks, of course. When it's Mardi Gras season, that's what we do. We do it like that. That's what we do. But anyway, of course, we can't celebrate it like we want to celebrate it this year due to the pandemic. But it's still Mardi Gras season here, and they still doing a little bit, but it's not the big parades and all the big throwing the beads and everything this year. So we'll make it up next year though. But anyway, please hit like and subscribe. Please hit subscribe, please, because like we said, I do this just to help everybody. It don't matter who it is. I do this to help everybody better their career. If they want to go into management, to have different type of fields up under their belt. We do budgeting, we do finance, we do accounting, we do all that. Inventory, we do it all. And if you would like, you can order my book. I have a book that's called Inventory Control Easy. Inventory Control Easy, okay? It's by Nichelle Jones. You can order it and use it as a walking tool, and it goes deeper into the things that we have been talking about for the past couple of months, okay? So this week, we on chapter 14, of course, y'all, and this week we will be talking about the financial report, okay? A financial report is what basically small businesses and companies or whatever should be using a financial report or have a financial report in place for their business. Not everybody use it, but it is meant for all small businesses. It's meant for large businesses, large companies, large corporations, or whatever. You should be keeping a track with a financial report, okay? And if you're not doing that and you have a small business or something, you might want to start doing that. Like I said, you can see the growth in your business, what you need to do to grow your business, and how far your business is coming along from year to year to year, and to make sure that before you go into a decline level, you already know and can catch it and improve your business, okay? So, it's some people that, small businesses that don't use financial reports and financial summary cash flow reports. But actually, if you want to grow your business and have different type of businesses and grow into a bigger business and grow into a bigger corporation, financial reports are the key, okay? So anyway, a financial report and a financial statement, the majority of companies and business have this report. And inside this report, and then you have a report called a balance sheet, which we will be getting into a couple of weeks later, and an income statement, which we will go through that next week. I think next week we're doing the income statement. I'm going to explain that to everyone. And then a statement of cash flow. Okay? So you have those different type of statements that a company should use. But the most important one that all companies should use, whether you small or a large company, you should use that financial report and that financial statement, okay? So it could tell you about your financial cash flow, okay? And how the business is doing. So that's the thing on that. So every business should at least have a financial report in place. If they don't have the income statement in place or anything else like that, you do need to have a financial report. That's up to you. I'm just telling you what will help your business, whether it's small or large. I'm just telling you what will help it if you do use a financial report, okay? So now a financial report let's go over it. Okay, what is a financial report? Okay, it gives a big picture of the value of a company at the end of a particular period. So you remember we talked about this in my previous videos way back that we did, that you keep a file each week, and then each month, then that's a file, like the month of September, the month of October, the month of November, okay? All of those are reports, basically your financial reports, okay? It tells what you sold, how much money you made, what did you bring in, what did you buy, what did you order, what did you this. Each one of you, we talked about you in week 1, week 2, week 3, week 4. Each week is a whole nother week for that month. You usually have about 4 weeks worth of paperwork because most of the time it's 4 weeks in a month. Okay? And then that next month you start over. Week 1, week 2, week 3, week 4. And you're supposed to be keeping a file for each week of the month. And it tells you what you ordered, what you sold, what you used, what you bought in, everything. Because you have your accounts receivables of things that vendors bought you and you paid the vendors. All of this is part of your financial report. Okay? So that financial report gives you a big picture of the value of a company. Okay? At a certain period or a certain quarter. So it's like every 4 months, a company should be taking, every 4 months, take all them 4 months worth of things, like September, October, November, December. They should be taking all of that, looking at it, putting it on a report of how much they spent that whole quarter, those whole 4 months, what they bought in them whole 4 months. What did they buy them whole 4 months? How much they paid their employees that whole 4 months? Okay? All this stuff you need to know. And then, of course, it'll tell you what your profit line is. Because, of course, we already talked about how each week will tell you how much profit your company made. Okay? And if you don't know that, and you don't know, kind of lost on that, you might want to refer back to my other videos where it shows you doing the inventory process, accounts receivable process, and all that. And it will tell you how you do your things, how you order your things, how you see your profits, and all that good stuff, okay? But that financial report gives you a big picture every 4 months. Or if you want to do it every 3 months, but most companies do it every 4 months, like you'll do January, February, March, April, and see those 4 months put together. What did you buy? What did you spend? And you put it all on one sheet. You got it in each month's folder of what you spent, how much you made, what you put in the bank, all that good stuff. So you got it already right there. All you got to do is transfer it on a financial report sheet. And you just fill it out. What did you buy? What did you order? How much money you bought in and all that stuff. And then you'll see your profit. How much profit did you make each one of those months? Add that all together, put it down on a financial sheet, okay? Or your financial report, okay? So it'll tell you all of that. Okay, and you put it on there, and then you be able to look at the bigger picture on the financial report. You say, okay, all 4 months I made $10,000, and all 4 months I spent $5,000, and all 4 months put together I spent about $2,000 on employees. And you put all that stuff together. That way, at the end of the year, when your company or your business or whatever have to pay back tax and all that, you already know what you're dealing with because you got it already on your financial reports, okay? And most of the time, companies do this every 4 months, okay? Which is called every quarter, okay? So now that's what a financial report do. It just give you a bigger picture of what your company the value of your company is and what's going on, okay? And it tells you the financial health that your company is in. Is your financial health good? That means, are you increasing in sales and making more money than you did last year or the year before last? Or is your company declining every year? And if it looks like it's declining every year, we already talked about how to fix that and how to increase your business, okay? So that it don't decrease. How to get it to get better numbers, more money coming in and all that. We've done that in previous videos. If you don't know, please refer back. Okay? So now, that financial report is basically a summary of the company's numbers. Like I said, it gives you the numbers on how much you made, how much you spent, how much you spent for employees, how much you spent on insurance, your liability stuff, all that good stuff. It gives you a number of basically what the company has spent, what the company has made, okay? It'll have the assets, you got to put your assets down there on that financial report. You got to put how much the cash you got, the buildings, if you have a building or you renting a building, your land, your marketable securities, like how much you pay for advertising, all that, your equipment, your company vehicles if you have it, your copyrights, your patents, your molds, all this stuff that a company owns and a company do. You need to have all that on your financial report each quarter. So each quarter you'll know what you have, what you own, and all that stuff. And if it stays the same, then each quarter it stays the same for as your assets. Maybe you got rid of one store and you're only working one store now. Then you need to put that when it's time to put it on that quarterly financial report, okay? But that's what is on that financial report or that financial statement, however that you want to call it, okay? But that financial report does have about your assets. It has the cost. Then you put all this should be on your financial report. We already talked about your assets. And your assets is your buildings, your land, your cash, your equipment, your company vehicles, all that stuff. Then you will put your cost of expenses. Okay? That's the money you spend to operate your business. Okay? Your payroll, what you pay for your employees, compensating your employees, like did they have vacation time, did you pay somebody a bonus, and things like that need to be on now. Expenses for the production, like if you have to buy another machine, or if you have to buy bags of paper or pens or pencils, all this stuff is in there in that cost of expenses, okay? Office supplies, interior, exterior maintenance, if you had to paint the building on the inside or the outside, all this stuff you are doing for the costs and expenses of your business. So all that should be up under costs and expenses, Then you have sales. This should be on your financial report. Sales. Products or services that customer purchase from the business. So whatever, how many sales, we talk about that. It'll be all in your weekly folders for each month. How much did you sell for that month? How much did you sell? But for a financial report, since it's done every 4 months, then for the whole 4 months, you had to put how much your store sold, okay? And that's your sales part, okay? Then it'll have liabilities. This is the money that the company owes to outside people, such as loans, bonds, unpaid bills, vendors, suppliers, contractors, employees, all that stuff, okay? That's liabilities. It should be a line on there about your liabilities. That's This is the money the company owes to people. So when you're doing that financial report, and if you haven't yet paid your employees because it's not time for them to get paid yet, well, you would have to put how much you owe all them employees put together. Okay? And if your company has a loan, this is for liabilities. This should be up under the liabilities line on that financial report. And for the liabilities, not only should it put, you should put your employees, if they haven't got paid yet or whatever at that time that you owe your employees, then you would put, because it's probably not time for them to get their checks yet, but you have a rough draft of how much you will be paying them that month, and so you will put that down there. And then if you have any loans, if your business done took out a loan from somewhere, maybe your business took a loan out to buy a company car, or maybe they took a loan out to make the business look good, or maybe they took a loan out to buy some things. That should be up under the liabilities too, because you owe that money out. You owe someone that money. So whatever you owe that loan company, it should be up under there. Whatever you owe left owing them, you need to have that up under there. Bills, if all your utility bills or whatever, you'll look at them and you'll stack them up. What all is not paid, if you have any bills that's not paid yet, that should go up under there, okay? So all that, vendors, if you have any vendors that it's not time to pay them yet, but you have to pay them, that how much you owe them needs to go on that liability line. So that's the liability part of it, okay? Then you have your profit and loss line. This is the amount of money a business or a company earns or loses. So at that 4th month, when you do this financial report, then you add up how much money your company made and in profits, and how much, or if you didn't make any profit, how much minus did you lose in profit, okay? If you didn't make any profit, then you need to put profit loss minus, say, $200. Say your company is $200 under for them 4 months. You will put minus $200 loss. Okay? But if your company has made some profit, you would say profit plus $200 if your company made $200 in profit. Okay? So you're supposed to have a profit and loss line. Then you will have an equity line. And that's money that is invested in the company or business. So if you have any investors that's investing in your company, or you invested something in your company or something like that, it needs to go under that invest line. Okay? So then you have a cash flow line. And that cash flow line is the amount of money that flows in and out of the business. Out of a business that is being reported during that specific period. So like I said, within them 4 months, you would already have down there how much your business bought in, how much your business spent for that month, for that 4 months. Like in these 4 months, we bought in, say, $1,000. And then within these 4 months, the company spent $1,000. Okay, so that's how it go. Like I said, that's what the cash flow is. You have that at the last, and the cash flow is how much your business bought in, how much your business spent. And that is, if your business bought in $4,000, but then your business spent all 4 months $1,000. Okay, so then you will put that on that line. Okay, so that's how that go. And your double entry accounting sheets should be inside of that financial report too. And we talked about double entry accounting a couple of weeks ago on that. So you know how to do double entry accounting, and you're supposed to be doing that. So all the double entry accounting sheets for those 4 months, January, February, March, April, should be inside, attached to your financial statement report. Okay, so that's what a financial statement report is. Okay, so that's basically what you're looking at for your financial report. Okay, now in your financial report, you got just about 8 key people who counts on this report to be right. Okay, so if you are the one who are keeping up with the company's financial report, you know, they usually, each company usually have one person that's what their job is every day, all day, whatever, is to keep up with the company's financial report. You know, this is what they do every day, every week, every month, whatever. They keep up with the company's financial report. So the company financial report is accurate, because it has to be accurate so that your company know what state the company's in. Is it doing good? Is it doing bad? What we spending? What we have? You know, what we bringing in? What are we spending? You know, what do we need to do? That's what a financial report is. It tells you the health, how healthy your company is operating. And it tells you if your company is not operating too healthy and is declining. All these things is what a financial report does. Now, 8 key people is 8 key people that really depends on this report to be right. Or they are involved in the process of this financial report. You know, like they are key players to making this financial report look healthy. And that is your executives and your managers. Your executive and your managers are key people who is running this operation, and they're making sure each and every day that this company or this business is doing well, operating well, and operating like it's supposed to be operated so that it can bring in good profits. Okay? Then you have that inventory manager. An inventory manager, you know, we already discussed inventory. We know how to do inventory now. We already did a couple of weeks on inventory, so everybody should know how to do inventory. If not, go back to my other videos where it say inventory, so you'll know how to master inventory, okay? And like I said, you might not be in these steps right now, but now you know how to do a financial report if you wanted to move up in the corporate office, or if you're running your own business, or you're thinking about running your own business. You know exactly what you need to do. Okay, so then the next key person is your inventory managers. Okay, and you know what your inventory managers do. Make sure that inventory is being controlled, that you control an inventory, and that they're running inventory correctly, that the company is not wasting any products, they're keeping up with everything. That's the inventory manager, okay? Then you have the employees, okay? The employees need to know how well they are doing, and the employees need to be running the company as well to great expectation, because if the employees are running the company very well, then of course that company will grow. Okay, but if you got some employees that don't care and they ain't really running your business right, that ain't taking their job serious and all that, that can cause a company to decline in sales. Okay, so all these people are key players to making sure that financial report or that financial statement stay on a healthy level to where they are growing, whether it's a small business or a large business. Okay, then you have your creditors. Okay, and they need to understand, you know, you have creditors, that people that they have loaned this company money and they want this company to keep making money so that that company can pay them back. And then if they pay them back good, then that company don't mind loaning your business or company any more money because they know they gets it back. But you could pay this because your company is doing well. So you have creditors that are key people to a healthy finance thing. And your government agencies, when your health departments come in and or you send in your tax stuff to your government agency and all that. At the end of the year, you have to send in your tax and stuff. All this stuff let these people know that the business is healthy or the business is doing good, and they know that you're keeping track with your company, okay? And your income tax things and all that good stuff, okay? And then you have your analysts. They need to review accurate information for a company for their clients who consider the company for investments, okay? So analysts are the people who are thinking about investing in your company if you want anybody to invest in your company. Maybe you want to open up another store and then you go to a couple of investors and ask them, hey, you want to invest in this right here? Well, your company has to be in a good growing stage, and it has to be bringing in constant money, not losing money. Your company have to be increasing in sales and stuff for investors to even want to stop and talk to you about investing inside your company, okay? Then you have those financial reporters. They need to provide accurate information about the company's operation, and that's all a financial report is. So you need that person who is doing the financial report, the financial summary report, to make sure that that company is operating the way it should, okay? And if anything is going wrong, a financial report person who does the company, small business or large, whatever person that is that does the financial report, they make sure every day, every month, every quarter, everything, all year long, that they have the numbers to see how well that company is doing, okay? Then you have your competitors. You have competitors that basically the executive staff will read financial reports from its competitors. Because, see, everybody should, small business and large businesses have a financial report that they should be sending in at the end of the year to the tax people or whatever, and then it's public kind of notice. It's public information. People could drop in there and see how well your company is doing, okay? And usually people that's competing against you, like if you are running a hair salon, most likely it'll be another hair salon that'll either come in your store and see what you're doing and see if they can see what your prices are so they can go back to their store and drop their prices, things like that. You have your competitors that always comes in, or they look up and see how financially well your company is doing. And if your company is doing financially well, then they'll start sending people to your store and stuff to see what are you doing, what is your prices, are your prices lower than their prices, do your employees treat people better than their employees, and then they go back to their store and try to change their whole operation to compete with your store. So that's what the competitors do, you see. But you have to have accurate financial information when you send it to your tax people or whatever, and it comes public on how well the financial state is for your company. That all has to be right information. Your customers need to know, everybody. It's some customers that they do look up certain stores and say, let me see if anybody complain about their product. Let me see if anybody complain about they had to ask for their money back and had a hard time getting their money back and stuff like that. You have people that looks up things like this to see if they even want to go to that business or to see if they even want to do business with that business. So you have people that do that. So, and the financial report tells all of that. So like I said, that financial report, it's supposed to have all these things on it. It's supposed to have your assets, how much do the company own, and all that good stuff. The cost of expenses is supposed to, you have to have that filled out. Your sales, what do you do in sales? Liability, what are you spending out? How, what you owe your employees. What do you owe for your insurance to cover the business? Then you have your profits and losses. They should have what the profit is for that company that year, or what that 4 months, or what is the loss of that company for those 4 months. Okay, and like we said, the equity is money that is invested in the company. How much money is invested in the company? If there's no money invested in the company, then it would be zero. But if you have money invested into that company, or somebody else has money invested in that company, then you need to put down how much that is. And then you have your cash flow. Like I said, you have to have what this company bought in, what that company is spending. Okay? So, and then you put your double entry accounting sheet attached to it, because remind you, everybody know what double entry accounting is and how you keep up with double entry accounting. If you don't, refer back to a couple of weeks and you will see the title that says double entry accounting. But that's the sheet that should be right behind or stapled or clipped on to that financial statement report. Okay, so that's how that goes. So now, let me explain to y'all this right here. Like I said, every company should have a financial report, or it's called a financial statement, however you want to do it. I don't care if you're a small business or a large business or a corporate business. Every business should be keeping track of a financial report. And if you're a small business and you're not doing that, I really suggest that you do that. I worked in the corporate office world, like everybody already know. I have the book out as well, Inventory Control Easy, that teaches all this stuff, and you can go through it real quick. It's not even but about probably 97 pages, and it has a test in the back of the book that you can test yourself to make sure that you're ready to go into this world and into these different fields. Okay, now I tell everybody that's running a small business, whether it's small or large. I don't care if you just run a small barber shop or a small salon. You really do need to start keeping up or make you a financial report, so you will know every 4 months how much money you bringing in, how much money you're spending out, because all of this help with the growth of your business. If you want to grow your business, the only way to grow your business is if you know what's going on in your business, and you know how much money your business is bringing in, how much money you spending out, and what you need to do to shake or delete or increase or whatever. That's all a financial report do. It just shows you the health, the financial health of your business. And if you keep up with the health of your business, you will know if your business, if you're losing money or you're increasing and making good profit. And as long as you know that and you're making good profit, then you can always expand your business. If you're losing money, you can catch it right then and pull it back to where you're increasing your money and not losing your money. Okay, but okay, so that's a financial report. And then you have a quarterly report. But listen to this now, a quarterly report, everybody does a financial report. I just told y'all that everybody should be doing a financial report, whether you're small or large. But then quarterly reports are only for companies, a quarterly report is only for companies that make $75 million. Okay? That's holding over $75 million in quarterly reports. Okay? So if that company is making over $75 million every quarter or every year or whatever, then those are the ones that files quarterly reports. Companies that make over $75 million a year, they file annually reports. Okay, so that's how that goes, and that's all I have for y'all today. And so, like I said, if you're not really understanding much or whatever. I shouldn't even have no gum in my mouth. That's what that was, y'all. That was gum. But I'm so sorry for that. But anyway, every business should have a financial report regardless. Okay, you don't have to have a quarterly report or an annually report unless your company is making over $75 million a year. Other than that, you don't have to do the quarterly report. The quarterly report and the annual report. But every company, I don't care if you're making $8 a month, you need to do a financial report. Okay, so that's all I have for y'all today, and that's all for chapter 14. And hope everyone understand that. If not, please rewind and go over it again. Okay, gain knowledge to prevent blockage, and we all know what that means. The more you know, the harder it is for anybody to block y'all from y'all goals and success. Bye bye. See y'all next week.